Okay, so we have a new episode of Legends and Leaders, and today it's great to have Matias here. So you're somebody that, you have so much understanding of this real estate space, and you've been trying to help push the industry forward with AI and implementing AI tools to make it simpler for people to understand how to invest, to understand how to get deal flow and better deal flow and the insights into it. You guys were named, I think, one of the 21 most promising prop tech startups by Insider. And you guys have already done, I think, over $100 million in commercial real estate transactions. So I'm really excited to have you here and to get into your story.
Ben, thank you so much for having me. It's super exciting to talk to you today.
Awesome. So where did your passion for business, for entrepreneurship, for real estate, like how did this all begin? Where did it come from?
I think since being a kid, I always thought that I will be an entrepreneur. I love taking risks. I love thinking about reshaping industry, and I love to think how things could be done differently. Whenever I get into a store, I'm thinking, how could they make this faster or better? How could they provide a better service or so on? So I think I've always had that chip in my head. Early on in my career, I worked for McKinsey and Company in consulting in New York. And all I wanted to do was work with startups and VC firms that were looking at new industries and so on. So when I got the chance to be an entrepreneur for the first time, joining a couple of friends that started a social gaming company, I didn't even think about it. Um, Real estate has always been a passion of mine as well. I've always been investing in real estate on the side. And our observation was that, for the large investment firms, it takes the same amount of time and effort to close $100 million transaction than a $5 million transaction. So they just focus on really large deals. And we think there's just a huge opportunity to unlock a lot of value and create more liquidity in smaller transactions now that we have the AI tools to source, underwrite, transact, and manage these types of assets.
Mhm. So, how did you get this business started essentially? Like, what were the first steps that you took did you have to raise money? Was it friends and family? Like, how did you get it off the ground, the first customers, etc.?
So the first thing we did was do a lot of research. I partnered with Sebastian, my co-founder, that worked at Google for several years, managing teams of machine learning engineers. And what we did is it was the summer of 2020, so it was just like on the middle of the pandemic. It was it was hard. It was weird times. And it was weird times for real estate too. But we were also excited about that. We know that a lot of the very successful businesses are started when certain markets are being stress tested. And real estate got stress tested during COVID, and it's getting stress tested now. And we think that's good because it's forcing us to build a company that's sustainable with time. So what we did that summer is a lot of business school students got their offers taken out, just because a lot of companies, couldn't train them or couldn't have people in person. So we went ahead and we reached out to Harvard, Wharton, Stanford, MIT, and we actually assembled a team of 4 amazing summer interns to work with us for like very little money. And we just went on doing a ton of research. We interviewed over 300 brokers. We interviewed over 200 investment professionals. We read as much as we could about aggregation strategies in real estate. Sebastian, my co-founder, knew a ton about machine learning from his times at Google, but we started understanding better what the dynamics for real estate were and what type of information was out there. So there was a lot of pre-work done over a period of like 3 to 4 months before we said, all right, there's a real opportunity here. Let's actually raise some money to go after it. So we, at that point in time, we raised a small pre-seed round from a couple of funds, basically with the idea of, hey, we're going to figure out something that's going to make it easier to source, underwrite, and transact smaller assets. But we didn't know yet what the full idea was going to be.
Hmm. So you raise this funding, you kind of have the research, you have the team together. So what's the first product that you start to build and to put out?
So the first product we put out was a sale leaseback product for doctors and dentists. Our observation was that a lot of doctors own the real estate, and it's hard for them to get financing to scale their businesses. So what we gave them is an option to sell the asset to us, assign a long-term lease, well, in which they could stay in their own location. So basically, they sold the real estate to us. We took ownership for it. We got real estate investors on the other side that actually own the assets, and we signed a long-term lease with the doctors, so they could continue to stay in their property as owners and managing the property as their owners, but get the liquidity they wanted to expand to new locations or reinvest in their business or potentially use their money to send their kids to college. So we were looking for opportunities where there's a lot of friction in the market and we could reduce that friction. If you think about that transaction in particular, from if a doctor wanted to sell the real estate, from the moment they list that property until the moment it actually gets sold, it will take them 13 to 15 months to close that transaction with multiple showings, with investors that probably don't have the capital to transact. 20 to 30% of the transactions fall through because the buyer could not access the debt they needed to transact. And it's just like a very painful, lengthy process for people whose businesses is not real estate. Their business is to run, in that case, a medical business. So we reduced the time to transact to basically 30 days, 60 days at the most, a single visit to the property, a fully online experience, just like a huge reductions in like cost, time, and friction to transact. So that was a very appealing product in the medical community.
So, I think I looked at your website. It says you guys do focus on deals up to $50 million in size as your market. Is this something you're kind of looking at, like, this is how we can test this out in a sense and we can scale further? Because I'm sure there's a lot of different businesses that don't want to be able to own their real estate. They'd rather you guys own it and make it much easier for them to just be in the building, have their own building, and then you guys handle the operations of that. Is this a model that you think you want to be able to scale much further, or do you want to just really focus on this sub $50 million market?
We basically see our opportunity in anything that's sub-institutional. So our view is, again, the Blackstones, the KKRs of this world are already transacting buildings are hundreds of millions of dollars. So where we think our initial value proposition is in going after smaller deals. So, 50, it may be $15 million, it may be $25 million, but what we're really doing is going after transactions that are generally ignored by the institutional investors and becoming players on that area. We can also partner with institutional investors and aggregate assets for them in this area. But the size comes from this idea of, let's not compete with the big guys that have very deep pockets and very low cost of capital. Let's try to partner with them to aggregate assets on their behalf.
And how important of a differentiator do you think your AI insights and platform is when being able to go and procure a customer? Is it that much of an important aspect to say, hey, look at what we can provide to you from an insight standpoint versus someone else that's saying, hey, we can buy your property, we can manage it, etc. But they won't be able to provide this. Like, how much of a differentiator has it really been for you?
So it's huge. So the first thing that we do is we enrich data with over 1,200 data points to actually find really good opportunities in the market and pre-underwrite the deals before we even talk to the owners. Right now, we're also very focused in multifamily buildings, where we're acquiring multifamily buildings in the Sunbelt states. And basically, we can map a market, understand what's going on in each of the buildings in this market, and proactively reach out to owners in that market to give them an offer that we know we can stand behind. The AI component of this has become so powerful that now it's basically doing the job of a real estate associate. So anything that's associated with sourcing, getting the comps, doing the analysis, doing the initial underwriting of the asset, the managing of the transaction between multiple parties, between seller, broker, if there's one involved, lawyers, etc., is being managed by our AI system. It has become so valuable that right now we're launching that as its own product. So, the next step for Keyway is launching Key Pilot, which is our AI solution, and we're going to start offering that to third-party operators, because what we've realized is that the pipes that we built to be able to complete our initial transactions are super valuable, and they're not only valuable for us, they can be super valuable for others as well, and that's what we're seeing. So we're going to start offering these as more of a SaaS platform. Think about it as kind of like a Bloomberg terminal for real estate transactions, where you have all of the information about the neighborhoods, you have all of the information about these buildings, you have an AI assistant where you can ask real questions in normal language, and you can really get smarter about specific deals or specific markets or specific opportunities in front of your screen.
So you provide all this like insight to people through the platform, and that's something I think that's very much a differentiator. But there's also the aspect of having the speed. Like you're able to close on deals much quicker because you're able to have the analysis in a faster way, in a more streamlined way. Like how much of a competitive advantage has this also been, and to have this speed factor that maybe other people aren't able to close as quick as you are, and you're able to do that and get more deals? Like how much of a differentiator has it been as well?
It's huge. It's huge in two different ways. One is, by the time you're looking at a deal, you know that you like that deal. Generally, if you're not using any technology for a deal, a broker will come to you with a deal, and you'll spend a couple of weeks understanding the dynamics of the market, understanding the real estate associated with that market. If there is a credit component to it because there's a business running in that real estate, you want to understand that real estate. So it'll take you like 2 to 3 weeks to get a good view of, like, is this a deal that's interesting to me or not, and what price? We do that in a minute. So by the time we're like interested in a deal, we can completely underwrite it, understand what are the big opportunities associated with this deal, and what are the main risks associated with that deal. So like on that, you've already saved a lot of time, and you're only looking at deals seriously that that will be a good fit for your portfolio. Then when it comes to organizing all of the documentation you need to put the deal under contract and get a lender, all of that is being automated by our AI system. So something that, again, will take 2 to 3 weeks to an associate, just like sending an LOI, sending the initial contract, following up on people on the due diligence to send you appraisals, etc. All of that is now administered by our AI system. So we can focus on deals that we know have high probability of closing at the price we need to close them. Two is, we can smooth out everything associated with the transaction and the lending because of our document management solution. And three, which is equally important, is once we own the asset, we have an AI-driven asset management portal that allows us to track the progress of how's that investment performing real time, rather than only looking at it once a quarter.
So a lot of people got really excited about like iBuying. Like that was a really big thing. Buying these like single family homes. You have this big investment portfolio of single family homes, and then you kind of become the tenant of them, and you can do it at scale. And it seemed to have backflopped on certain people, a lot. It was very difficult because it was hard to keep up with scaling that quick and the expenses that were incurred with that. Like, how do you intend to really manage the Keyway business and avoid the issues of iBuying? Because there's so many positives to it and the scalability of it, but the expense management was such a hurdle of that. Like, how do you intend to avoid that here?
Yeah. So as you said, I think there were some great things done around iBuying. For sure, a bunch of the companies in the space reduced a lot the friction associated with listing a property, pricing it, and selling it. I think some of the iBuyers had a lot of hubris and kind of like thought that the machine will make a fantastic decision associated with pricing. So I think that was the first mistake. The way in which we think about it is we marry amazing data and AI with amazing real estate professionals. and we give tools for real estate professionals to take solid decisions. So we're not putting offers based on the pricing that the machine is saying, but we rather think about this as a Bloomberg terminal where it just gives you all of the data and all of the analysis in the fingertips. But at the end of the day, the decision is taken by a real estate investor. And that's, one of the big difference between like iBuying and what we're doing. We're removing friction and giving all the data and making it easier to transact what you want to transact at the price you want. But we're not telling people this is, the price at which you should transact and an offer gets sold. I think the second big difference between iBuying and what we're doing is, as you were saying, a lot of the iBuying aggregators were also managing the day-to-day management of the properties, and that's very complex. In particular, when you're dealing with a bunch of houses that are not close to each other. My previous business, actually, one of Fix, was in the property management sector, tech-enabled property management. So I have a lot of respect for that business, and it's a very complex business to run. So what we do at Keyway is we do the asset management, so the business plan, but we partner with local property managers to actually manage the properties. So that kind of like reduces, just like the risk associated with, a lot of the day-to-day of the property management. I think the third thing that happened in iBuying is a lot of unsophisticated people got in this business, right? So some very sophisticated partners, so platforms such as Invitation Homes that was acquired by Blackstone and subsequently sold, they were very successful at doing this because these were real estate investors that truly understood what they were doing. They understood, that the rent you get from the properties is not the cash you get. You need to subtract taxes and insurance changes. And so I think there's a lot of people that aggregated this, did it with a mindset of house prices are going to increase forever in time. And I do think the long-term trend is that prices are going to increase, but there are going to be hiccups along the way, right? And we're seeing that, rates really affect the prices of homes and the price of real estate. The liquidity that exists in the market and expectations about the economy really affect the prices of real estate. So you just need to run scenarios and be like, hey, what if rates stay high for the next 5 to 10 years? What if rates go actually higher? What if rates come down? So running all of those scenarios is also what we do using machine learning to facilitate the decision taking and the management of opportunities.
Mm-hmm. What are your thoughts on the commercial market? I mean, there's been a lot of people that a lot of these companies that have kind of shied away from the issue that's been going on, where you have this work from home culture. Half of it, half the week your employees are working from home. They're not coming into the office as much. They do want them to come into the office more, and that's hurt values of what people can get for some of these buildings, et cetera. Like, what do you think is the next kind of state for commercial real estate? Do you think it's going to continue to appreciate? It's something that is going to always hold value because people will need offices, or maybe it won't as much because there's less interest in that because there's this work from home nature. Like, what do you think is the future of that?
So I think, first of all, I think we should not put all commercial real estate in the same bag. So I think there's something that's happening very specific with offices, right? And the way in which people work. So, and even within office, I will say there's a big difference between Class A office and Class B or Class C office. So what we're seeing in New York, for example, which is a market in which we do not transact, we're much more focused in Sunbelt state transactions, but Class A offices are actually pretty full and they're doing pretty well. But Class B offices are completely empty because people just don't want to go to an office that doesn't feel that great. And I think that market is going to get really aggressively price adjusted, and investors are going to have to think about alternative uses of those properties. I think the long-term trend is people are going to work more from home, and it's going to be more hybrid, and there's going to be space for office, but it's going to be a fraction of what exists today. So at Keyway, we've stayed completely away from office space, and instead we're very focused on real estate that's very critical, and I'm very bullish on critical real estate. That's warehousing, logistics, medical buildings where people need to go in person. It's like a dentist office is not going to get disrupted by AI or machine learning. You could do a first visit on a video consult, but at the end of the day, you need to go to a dentist to actually get your teeth fixed. Same thing with multifamily. People need places to live. There's a huge shortage of homes in the US. So, I think multifamily in states with positive migration is it's just like a very exciting story right now. So I think you need to look at, what's happening with the way in which people live and work, and that's definitely changing. So office, I think it's in a tough spot, and it will continue to be for a while. And I think people that are smarter than me are going to figure this out. For now, from a Keyway perspective, we're just staying out of anything that's, regular office. Medical buildings, I think, are, where procedures are performing the real estate are very sticky. So I'm very bullish on that vertical. I'm very bullish in logistics and warehousing, and I'm bullish in multifamily investments. Again, in states and in cities where people are moving to. So, we're big fans of cities such as Dallas, where Goldman is moving a bunch of people, JP Morgan is moving a bunch of people, a lot of headquarters of Fortune 500 companies are being relocated to those markets. So I think it's just like, it's very important to look at what sub-vertical are you thinking about investing in, and then what's happening in that geography and in that neighborhood and in that specific block to that is going to affect you, the long-term value of your investment.
So you raised a $25 million Series A funding. So you have capital from that. How do you intend to discipline the business and manage it now during this time where it's not as easy to get capital, it may not be as easy to close deals, etc.? Like, what are some of the practices you've implemented to ensure that you can continue to grow it and and really manage it during a time like this?
So the first thing is, just like you need to have a war mentality in these times. You need to really understand what's truly critical in my business and what's not critical in my business. The second thing is you need to assume that, your last round may be truly your last round. So how can you turn to profitability if you cannot raise a successful subsequent round? So just like having that mentality across the team is super important. The third thing for a lot of like prop tech companies and fintech companies is staying balance sheet light. So, a lot of the iBuyers, for example, scale by acquiring assets on their balance sheet. We don't have that luxury in this market, and I think that creates better companies. So we're making sure we're balance sheet light, and when we're transacting real estate, we're raising capital from real estate investors to transact that. We're not using VC dollars to buy real estate. And last but not least is, just like, what's the real value of a tech company is the technology that you're building behind it. So our view with Keyway was always to, create scale to then open up our pipes to others to transact using the tools that we built. And we're doubling down on that strategy of, hey, there's amazing SaaS here. There's a huge opportunity to be what we're calling the co-pilot for real estate transactions and really enable real estate transactions and access to information, not only for Keyway, but for anyone that wants to access the commercial real estate market.
I mean, that's all the questions that I had. I appreciate you coming on. I think you have something disruptive here that you're trying to do different in a space that, seems to be very open. It's a white space opportunity. And developing this type of software that you have to provide insights that are unprecedented in the space and new access to deal flow that, isn't maybe fully available is something that I think could really be disruptive. And I'm excited to see how you continue to grow Keyway. Appreciate you coming on.
Thank you so much for your time, Ben. Really appreciate it.